First, I would like to express my deepest condolences for those affected by the recent tragedy in Valencia and other regions of Spain. It is an honor for me to be in this year's Santander International Banking Conference. I will address three topics with a Latin American perspective. First, the long-term development challenges. Second, the current outlook. And third, the perspectives for financial intermediation. Latin America is better characterized not as a relatively homogeneous group of countries, but rather as a mosaic with both contrasts and clear common traits and challenges. Nations and societies' progress is the direct result of shared goals and values. When a country lacks a broadly shared vision of the future, it cannot enjoy a stable present, and it cannot embark in society's most ambitious and profitable long-term projects. Society's Achilles heel is polarization and fragmentation, as it pulls into zero-sum quarrels and to backpedal policies. Latin American history can be illustrated by a snakes and ladder board game, where countries hope to find a ladder that can fast-forward their way to development, but sometimes find themselves standing in a snake that pulls the country back. This erratic performance is extremely costly since the compounding effects of sustained growth play a key role for development and prosperity. History has proven that it is more important to avoid crisis, the snakes, rather than looking for quick wins or silver bullets, the ladders. In the last decades, globalization and technological change generated unprecedented progress and development throughout the world, with big winners and an increase in inequality. Despite lower poverty and higher per capita income, the increase in inequality fostered fragmentation and conflict, making it clear that countries should always mind the gap between its citizens. Social media has further polarized our societies and promoted disunity, balkanizing opinions from daily news to deep truths, allowing politicians to bypass institutions and parties, moving democracies from the preferences of the median voter towards extreme positions and alternating from one extreme to the other, promoting quick fixes, jeopardizing long-term development and putting apolitical institutions at risk. Polarization is present at many levels: global, national, regional, and even in academia. As Latin America history clearly shows, erratic policymaking and short-term approaches create societies where effective social mobility ladders are scarce, inequality is perpetuated, and polarization becomes endemic. The road to attain progress and development has been elusive for Latin America, with far too many failed experiments. The region should not try to reinvent the wheel. History and experience provide ample evidence in favor of market economies with strong democracies that provide critical public goods. I will mention four: the rule of law with personal security, contract certainty, and well-defined property rights; a level playing field for all with high-quality education and health services for all; incentives for efficient allocation of resources, that means profitable long-term investments and higher growth; and fourth, economic stability, both in terms of price and financial stability. Mindful of the significant cost of policy swings, countries have found useful to commit to long-term strategies, usually at the constitutional level, and adopt multilateral approaches, usually with international treaties. Both strategies reduce bad equilibria from internal political struggles and fragmentation. The European Union is a prime example of the multilateral approach. Latin America has some examples of this commitment strategy, notably promoting trade openness with multiple free trade agreements, increasing capital account openness to access global financial markets and reduce the possible financial repression episodes that have been quite common in the region, and a growing number of independent central banks that pursue price and financial stability. These strategies have improved resilience, allowing the region to cope with the global financial crisis in 2008 and the recent pandemic with significant lower costs than those incurred during previous external shocks. The downside risks in the region have been reduced considerably. Nonetheless, much more needs to be done to overcome the long and slippery road towards development. Every country needs to build social trust in order to reach a shared vision of the future and develop strong institutions with long-term objectives that see beyond the political cycle. We must acknowledge the critical contribution of Dana Acemoglu, Simon Johnson, and James Robinson, the 2024 Nobel laureates in economics, whose insightful research enhanced our understanding of the importance of well-designed institutions for prosperity. To overcome its complex political quagmire, Latin American countries need stronger and more involved citizens that demands its politicians to avoid polarization and promote an inclusive shared vision. We all need to work in the reconstruction of social trust with shared goals and values to bring a better future, finding common ground between different individual interests and the common good. When these objectives are reconciled, societies get closer to their true potential in terms of economic, political, and social outcomes. Now a few words on the current challenges and outlook in Latin America. After the pandemic, economic activity in Latin America experienced a strong rebound and has moderated, especially during this year. This reflects weaker external demand as exports has slowed significantly. The outlook for growth in Latin America remains weak, and the balance of risks of the region has been highly dependent on external conditions and is currently subject to heightened geopolitical tensions and a more uncertain global financial cycle. As we transit from globalization to a more fragmented world, Latin America will be pulled by opposite forces coming from the West and from Asia. In the last quarters, inflation in Latin America has gotten closer to targets on the back of lower goods prices, pressures, and a strong anchoring of expectations. Nonetheless, significant challenges remain for a full convergence to targets. Regarding fiscal policy, three challenges stand out for the region. A significant reduction of fiscal space due to the pandemic spending spree. A recomposition of fiscal expenditure has taken place, reducing the share of spending of public services in education, security, and health, and increasing it in direct transfers. Delayed fiscal consolidation with a lower willingness to increase taxes and reduce expenditures. Among emerging markets, Latin America lags in total factor productivity growth and compares poorly in terms of rule of law and the quality of public services. This is worrisome due to the low appetite for much-needed structural reforms, which are essential to significantly improve the medium-term outlook for growth and development in Latin America. Now let me go into the outlook for financial intermediation. In terms of financial deepening, there are profound differences between advanced economies and Latin America. Balance of payment crisis, banking crisis, domestic turmoil, and even bank nationalization episodes have had a heavy toll in Latin American financial system and caused a huge financial deepening gap. In this context, new technologies have a breakthrough potential for financial deepening and inclusion in Latin America. To attain a dynamic and healthy financial ecosystem, the following key factors are needed. One, same risk, same regulation. Avoid regulatory arbitrage from non-bank financial institutions, fintech, and big tech. Avoid regulatory loopholes. Innovation can materially change financial services and introduce new risks. 3, revolutionize domestic and cross-border payments. 4, promote interoperability and network neutrality to avoid winner-takes-all that affects the financial system. 5, same data, same protection. Homogeneous rules and standards for data protection and data sharing. 6, banks need to develop solutions to attain what I would call a dynamic long-term financing project ecosystem, pooling resources with pension funds in new and creative ways to promote infrastructure and sustainable projects. 7, use behavioral economic insights together with artificial intelligence to provide a better client service match and develop strong client empathy. Develop a customer-centric financial services ecosystem. 8, forget old verticals. Networks and apps are crossing sectors' borders to meet customer needs holistically, moving from market share to customer share. And finally, adopt technology and preserve trust in the financial system. The risk-reward trade-off for financial intermediaries in Latin America has increased. While growth opportunities have expanded considerably, the outlook is more uncertain, and with larger downside risks due to fragmentation and concentration of power in the region. Let me close by saying that the Snakes and Ladders board game has gotten riskier, but more rewarding. Selecting the right strategy has become even more crucial than ever. Thank you very much. I won't take much more of your time. I was asked to introduce the next panel. So can I call for Jason Marczak, Vice President and Senior Director of Adrian Art Latin American Center, Jose Juan Ruiz, President of the Real Instituto Elcano, and this will be moderated by Marisela Alvarenga, Chief Investment Officer of the IDB Investment Bank. Thank you.